As we can see here, Bitcoin continues to have these big moments of volatility on the 1 hour time frame. So we're seeing a fair amount of liquidations as a result, and I don't think things are finishing off just yet. I expect a bit more volatility here for BTC. So hi and welcome back to Cheeky Crypto. I hope everyone is having a fantastic festive period. We're going to jump into the technical analysis on Bitcoin on the 1 hour, 1 day, 1 week's time frame, sharing my thoughts and opinions on what I think is going on here with BTC. Let's roll that intro and get right down into it. Okay guys, here we have a Bitcoin paired up with USDT. This is the 1 hour Binance chart. And as you can kind of see here, we had this upper trend line. It was tested over here at 600 hours on the 22nd of December. Okay, we had that high at 44,398. We then tested again at 0400 hours on the 24th of December. That was 43,946. We tested again at 1400 hours. 24th of December, and that was 43,864. And then obviously we moved down to the low side, right? So we saw this breakdown hitting $42,500 before surging back up to our trend line. Now, what's really interesting about this, and obviously why trend lines are a bit subjective, is that you can see that we did actually pierce up above this range briefly here before moving on down. And if we were to take this trend line and move it up, you can actually see that this is where we're finding resistance right now. And then of course from here, we found big rejection again around the 50 EMAs, 50 SMA, and then moving down, right? So we can see that there's huge amounts of resistance on the 50 EMA, that's the red line, and the 50 SMA, that is the yellow line. At the moment, at the point of recording this video, both of those are sat at 43,364 for the red EMA and 43,381 for the yellow SMA. And as we can see here, we've got heavily rejected. We're in fact now down lower than the 200 hourly EMA at 43,223. And the 200 hourly EMA, like any 200 EMA, is your trend filter. If you're below it, then you're bearish. If you're above it, then you are bullish, right? So we're still finding ourselves inside this kind of channel wedge. We were, of course, talking about this move more towards 41,991 to 42,305 during yesterday's live stream. That is not a valid area anymore because we did move up slightly higher than we were expecting for that range to be true. But it does still put us into a very bearish situation here. I still think if we were to kind of think about this kind of objectively, we are likely to see a low down towards 41,000 something, and I'll get into that in a second. But before we do that, we are probably going to be looking for another move to the upside. This upper trend line, I think, is absolute bullshit. So we're just going to go ahead and remove that one for now, because I do think we're likely to break that once again. It's more of a ranging market. So let me show you where I think price is going to be moving to. Okay, I could be wrong on this because there's a couple of different ways this could go, but for the most part, I'm looking for price to kind of move up towards 43,849 to 44,163. Okay, that would be my kind of expectation. I'll be looking for it to move here. It should stay below 44,398 because once complete, my expectation will be a bigger corrective move back down. Let's hypothetically say we end up somewhere around here at $44,000 flat, somewhere around here. Then I would expect us to be testing that low trend line once again, coming in somewhere between 41,687 and 42,119. Okay, so that would be more down in this lower range here. Okay, so you can kind of see my expectations here will be up and then to the downside, right? And this is just going to be following the idea that, you know, we have momentum to the upside to be shifted towards. We obviously have seen a significant area hold at the bottom here at $42,500. Now, Elliott wave theory tells us that actually we should just expect moves to the downside. Okay, so outside of this understanding, if we actually were to track things slightly differently, here we would actually see this as a potential breakdown structure. So, for example, right here we would have a kind of 5-wave movement. Okay, looking for that to finish off. And then over here, that's a part of a bigger wave 3, up 4, down into 5, and then you end up in this lower range, right? So we've kind of got two things that are likely to happen, right? This area, I think, is inevitability. We are likely to head up down into this range, right? So 41,688 to 42,113 approximately. But the only thing that I think is different here is how you do it, right? You either got to go up before you go down there, or you're going to go straight down there. Okay, so what we're looking for is looking for confirmation. Anything lower than the swing low at 42,500 is going to confirm to me that we are heading down here straight away. Anything higher than our swing low over here at 43,328 is going to confirm that we're moving up before we move down. Okay. There's no other way it's going to happen here. I think it's an inevitability that we are likely to have that low, unless, of course, we pierce up higher than 44,398. Okay, so there's going to be a few different things. There's a lot of kind of things to kind of think about right there. Let me try my best to kind of share with you my thoughts and opinions on that in a little bit more of a clearer way. Okay, so if we go down lower than 42,500, then we are heading into our low range between 41,688 and 42,113. If, however, price moves up higher than 43,328 before we have this low, okay, then my expectation will be that we'll have a move up towards 43,848 to 44,168. And once that completes, then we move down to our low range down here. Okay, any price action above and beyond 44,398 will prevent us from moving down into this low box under the structures and under the patterned ranges that I've just been talking about. Okay, so it's quite straightforward when we kind of think about it. It's about kind of getting confirmation of the direction and then hedging your bets that way, right? And so for the most part, that's kind of where that looks. Now, throw some smart money concepts into the mix here. It does change things up a little bit, but we can see what we are in a bullish structure, and we are in the kind of lower highs and lower lows, and they do have a tendency to want to break on up. We've kind of taken out those fair value gaps, which we had seen stacking up over here. So all of that is looking good. We're just finding support on equilibrium. There is a fair value gap down here that's not yet filled out. So another move down to fill out that fair value gap could put us in a really strong position. Likewise, if this area down here were to get filled out, it's a good area of previous support and could be exactly what you need to see another lift to the upside. Okay, I'm going to turn smart money concepts off. Now, when we take a look at our stochastic RSIs, we're oversold on the 1 hour, oversold on the 4 hour, although there's still loads of progression to the downside on that 4 hourly time frame. 8 hourly time frame also is the same. Okay, so we're not yet necessarily ready to see significant surge to the upside. Now, this means that there's a high probability of that 5-wave structural point coming down here like this to finish off those other structures that we were just talking about. Okay, that means that we might find ourselves moving down to this low range at 41,688 to 42,113 because we do have momentum to support it. Okay, so two options are we move up before we move down, but a move to the downside I think is highly likely. Now, if we do just move down there straight away, that's great. We finish off our patterns a little bit earlier, and then we can kind of move upwards from there. Okay, and we'll talk more about what that might look like in the future, and so we do these updates every single day. Okay, so that's just stochastic. It's looking okay. It's not too bad. Throw in our divergence indicators here. Anything of note? No, nothing. Our RSI on the 1 hour time frame is in the low range. If we take a look at our 4 hourly divergence indicator, there's nothing else being no divergence is being indicated here either, and we are still looking at progressing down on the RSI. On the 8 hour, no divergence is still progressing down on the RSI. 12 hour, 16 hour, 12 hours. 16 hours quite an interesting one, but 12, 20 hour and the daily, again, nothing else to note on any of those. So looking pretty good from that kind of point of view. Nothing major to be indicated within the divergence indicator. Volumes in, again, you can see we're seeing more spikes up with heavy selling volume. We saw the same with buying volume. This is just a telltale sign to me that the market is being pushed in one direction at the moment from people who want to control the market, essentially. So on your 1 hour time frame, it's all looking unfortunately bearish and kind of just boring sideways trading. We are not talking big movements in the space here at this point on this 1 hour time frame, but it is good to kind of be trading these kind of smaller moves, whether they are 1%, whether they are 2%, with leverage, because they are going to magnify your profits. But do bear in mind that it's high risk, and if you do decide to invest in cryptocurrency, then you do run the risk of losing all your money, specifically if you are going to be using leverage-based trading, because it does your losses in the same way that it multiplies your gains. So just make sure you do your own research, come to your own conclusions, consult your own financial advisor if you have one. Obviously, I am no financial advisor. I'm just a guy on YouTube sharing his thoughts and opinions on the data in the charts as he sees it. Let's move over into the daily time frame. So here on the daily time frame, we can see that we hit that higher range expectation. We spoke about this on the live stream yesterday, 43,847 to 44,651. From here, the expectation is to move down towards our 50 EMA, 50 SMA. They are currently sat just south of the $40,000 support level. As long as we remain above the $40,000, I think the bulls have somewhat control over the market at the moment. Those EMAs, if we were to lose them, currently the 50 EMA is at 39,887 and the 50 SMA is at 39,876. As long as we're above these, I think we're strong. If we lose these EMAs, unfortunately, we're going to be looking at the fair value gap at 35,735 to 37,653, and obviously the 200 EMA at the moment is at 32,934, which obviously that 200 EMA is going to be our main trend filter here. As long as we're above it, we are bullish on the market, but that gap between where the price currently is and that 200 EMA, it could drop quite a bit and still technically be in a bullish structure. So just bear in mind that as we kind of see here, 200 EMA set at $32,934 can be seen as a potential area of support should we lose any of those other areas of support on the way to the downside. Now, obviously, our stochastic RSI on the daily time frame has, well, unfortunately, not really done terribly too much. It's lifted up, showing that there's not really an appetite for buying, and we can come all the way back down into that oversold area. We can, of course, rally up a little bit more if it needed to, but again, I would not expect that to be the case. Taking a look at the divergence indicator, the last divergence that we saw was hidden bullish divergence on the 17th of December. We did see a run to the upside from this, and since then we've just started to move on down. We're not seeing anything else in terms of the divergences right now at the moment. Volume profiles, of course, are decreasing across the days. If we zoom out of here, you can really see the difference in volumes here, right? We had what it was like in March of 2023 versus where we are right now, and pretty much from March it's been very, very boring, low volume stuff going on. So we can argue, why has price been moving up whilst volumes are this low, considering where they were previously? It's all to do with supply and demand. The supply of Bitcoin on exchanges was shrinking as the demand was non-existent. That is basically allowing price to push up, but I'd say that is artificial in the way that it works. Hopefully this is really clear to you guys. Volume before March 2023, volume after March 2023. You can really see the differences here. This is not a good sign. Anyway, moving out of there, because I know people don't like me to point out the obvious. Maybe it's just some of the trolls don't anyway. But nonetheless, there we go. And so on the daily time frame, that's kind of where we're looking. On the weekly, here we can see this is Bitstamp data. We've rallied up quite nicely here at the moment, and that's the monthly. So let's bring it to the weekly. There we go. We are finding ourselves inside our parallel channel. We tested the high range. We'll be looking at moving down. Obviously, the first area of interest for me comes in at $36,000 to $37,000. This is going to be a first area of support, and that's going to be the midline being tested. Lose the midline of the parallel channel, we should be expecting it moves more down towards where I'm more comfortable thinking at 30,330 to 31,818. This is also going to fall in line with the 50 EMA, the 50 SMA, and by the time we get there, maybe even the 200 EMA. Okay, so that's going to be the interesting area. It's also going to be the lower end of our trend line of our parallel channel. Now, following on from the stochastic RSIs, loads of momentum to the downside on the weekly stochastic. Okay, we are looking for bigger corrections to the downside. Now, if I take that off, throw in a divergence indicator, the RSI is also heavily overbought on the weekly time frame. Okay, we saw the last hidden bullish divergence on the 4th of September. And we saw great rallies to the upside on the back of that. But ultimately, we are looking for corrections here on the divergence and the RSI and stochastic RSI as well. Volume profiles, here is what Bitstamp looks like, right? And you can see volume profiles in the previous kind of bullish market, 2017, 2018, obviously volume profiles are low, kind of where we are now. Volume profiles in 2018, 2019, and dropping back down as we kind of start off 2020. Big selling pressure during COVID. And then, of course, up into 2021, volume profiles were high. Again, not as high as they were back in February 2018, for example. And of course, where we are right now is volume profiles that are very, very low. Now, this is Bitstamp, not Binance. And obviously, if we take a look at it on Binance, it is shockingly different. I will go ahead and bring that up for you guys here as well. Let's go ahead and just bring up the weekly. Okay, we had this kind of volume profile on Binance. Okay, so you can see larger spikes in volume on Binance during 2023 than you saw back in, let's say, yeah, it's not really a good example, but bear market of 2018 going into 2020, and then you saw 2021 with significant volumes, but ultimately nothing like we saw previously at the beginning of 2023 and the later part of 2022. But ultimately, volume profiles are right now as low as they were on Binance back in 2018. So you get kind of similar profiles there. And also December of 2021, beginning of 2022. These are the volume profiles that we're kind of seeing ourselves on Binance right now, whereas Bitstamp, you can see, is much more significant volume during kind of the bullish markets, coming down in those bearish markets, spiking back up into the bullish markets, and then down again. And we are not really seeing decent volumes, not on Bitstamp, not on Binance, and so forth. And that's a bit of a concern for me, specifically at these kind of levels. So coming back into our chart, we obviously have seen a very significant run to the upside. This is because shrinkage of supply on Bitcoin on the exchanges, and not because of an increase in demand. And that's a really important note, because we really need to see an increase in the demand to really take this up a lot higher, in my opinion. There's only so much shrinking the supply on Bitcoin is going to do for the price action of BTC to the upside. And I think when that Bitcoin starts flowing back to the exchanges, you start to see this price drop down quite heavily. And so that's kind of where I sit with this one. I think we're looking for heavy corrections on Bitcoin. We're looking for probably price to come down to a minimum of 30K, but I wouldn't be surprised if we test out 24, 26. And if we can't hold those areas, then unfortunately, yeah, we are talking 21,000. And these are pretty healthy corrections. I say healthy because you need to see them after these kind of significant moves to the upside. I would expect 30% gets us down to 30K, 42% gets us down, or 40. We'll call it 45% gets us down to 24K. And, we're talking about 55% getting us down to sub 20K. And again, they're all very possible scenarios considering everything that is likely to happen between now and that next big surge to the upside. A 53% correction, it has been very, very healthy after a significant surge to the upside. Just take a look at December 2018 upwards towards June of 2019. We had a 53% correction, gets us down to December 2019. We start rallying up, the pandemic drags us down deeper. If we exclude the pandemic, it's 53%. If we include the pandemic, then of course it's a 72% correction. I suspect a 50% correction there is actually probably the most typical. And if you do not see that, then you're actually going to see a lot more 40% corrections during the bull market, right? We rally up, we'll have big 40% corrections to the downside. And again, that still puts us at about $30,000, maybe even lower than that. Okay, kind of talking about more 26K. So we are looking for a big correction here. And if we do not see a nice healthy correction of about 53, 55%, i.e. retest 20K, then essentially I think we're going to see a lot more retail investors get hurt through having more 40, 30% corrections during our run to the upside. But guys, I'm going to leave the video right there. If you have found it useful, informative, smash that like button. I hope everyone enjoys the festive holidays, and I'll catch you all in the next one.